We're half an hour away from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Annabella Droulers with David Ingles.
Let's get to your top stories this Monday morning. On the up, stocks and treasuries catching a strong bids with the dollar in retreat as traders assess Donald Trump's pick for Treasury Secretary. Scott Bessent is being viewed as a fiscal hawk with Wall Street know-how.
Also ahead, China's premier expected to meet foreign business leaders today as companies worldwide brace for Trump's tariffs.
And Nvidia's Jensen Huang calls for global cooperation as he visits Hong Kong amid fears of growing tech tensions between China and the U.S.
Start of another trading week here in Asia, and really that focus as we count down to the open of mainland equities in just under 30 minutes from now is how are the markets going to be reacting to Scott Bessent being chosen as Treasury Secretary. In a word or a phrase, it's really about that relief rally that's coming through this morning. So you're seeing the broader benchmark gaining 1% at the open, really being led by what you're seeing in Japan. Take a look at what we're seeing in the Nikkei this morning, nearly 2% to the upside. It is that pullback that we're seeing in Treasury yields as well. You've got the 10-year retreating by around 5 basis points. A sense of calm coming through that Scott Bessent is someone that can continue to prioritise economic stability, market stability without some sort of political point scoring as well in the mix. But still, of course, that overarching impact of tariffs and those rising geopolitical tensions. Where we're seeing as well that emphasised today is also in the tech space. We're keeping an eye on what's happening in Samsung in particular. We did actually hear, I spoke to Jensen Huang over the weekend, the Nvidia CEO, saying that they are looking to greenlight, certify Samsung's most advanced AI memory chips, and we are seeing that stock a bit higher as well. But let's change on, because at the same time that we all have this sort of reaction to Trump's Treasury pick, we're also keeping an eye on what's happening in China's earnings and the numbers that have come through. Because to end the week, we saw the Golden Dragon Index another slump, but PDD has really seen the brunt of that, dropping around 15% over the past few sessions. So earnings disappointed. We saw that really coming through for the likes of Tencent, Alibaba as well. And off the back this morning, just tracking a wave of ADR downgrades. So you're seeing that from China Merchants, DBS, JP Morgan as well. Again, how that feeds into the session today, let's take a look at China futures and what we're seeing ahead of the open, as I said, just under 30 minutes from now. Actually, Dave, looking to open a little bit higher, but still put it in the context of what has been a lot of downbeat sentiment.
Absolutely, and I think this Bessent bounce might also be applicable when you look at, I guess, the Chinese equity market, which I guess to Bell's other point there, the drag coming from tech and the massive drop that we had on Friday might just indicate we are going to get a bounce off specific levels. All that being said, when you look at the broader Chinese equity universe, you look at tech in particular. In fact, HS Tech is bottom of the barrel in terms of how steep the drop has been from the recent peak. So it's really been offshore in Hong Kong, and within the offshore space, it's been in tech. PDD, of course, as Bell was just underscoring there, the disappointing earnings season, the lack of catalyst there. So we are on bear market watch. It likely doesn't happen today. We're about 2-3 bad days away, and with the bounce we're seeing today, I guess we can push that aside for now. All that being said, specific levels to watch, MSCI China 6105, below that level gets you there. On the benchmark itself, it's a stock sell-off. Apart from that, one specific stock we're tracking as well here today is Kingsoft Cloud. Massive move in the U.S., 25% on Friday. We'll see what happens with the Hong Kong listing today. And, of course, there have been some changes to the Hang Seng Index. I think we've gone from 82 to 83 constituents, effective December 9, if memory serves me right. And New World is out. Kuaishou is in, and also New Oriental is in. More on that in a moment. But, yeah, let's get back to our top story and what we're seeing pretty much green across our screens today.
Yes, we said it's really that market reaction that we've got coming through to Scott Bessent, Donald Trump's decision to tap him after what was really a much debated and mooted decision, really, that we had a lot of different people that could have been chosen. But let's get more with our news desk editor, Jill Deesis. And Jill, I mean, it came down to, it seemed like about 4 candidates. How did Scott Bessent really come out in front, do you think, in the end?
Well, really here, Belle, I think, yes, like this is a pretty contentious pick in terms of how long it actually took to get to come together here. But I think Donald Trump knows that. I mean, this is somebody that has already staffed his cabinet with a lot of other big firebrands, big, boisterous personalities. But he does understand to a certain extent that, one of the reasons why people like him, why Wall Street likes him, is because he also he wants to tout the ability to bring stability and to, boost markets and stuff. So I think that in a pick like Scott Bessent, somebody for Treasury Secretary here, I mean, he kind of understands that he has to balance that idea of all of these pro-Trump agenda items that, the incoming president really wants to bring with somebody that can actually be a little bit of a moderating force. What we saw, though, over the last few weeks was certainly some infighting within Trump's circle on how exactly to make that happen. Howard Lutnick, who was eventually tapped to become Commerce Secretary, actually kind of vied for this role, obviously lost out on that, and looks like that's what ultimately brought Scott Bessent back up to the front here.
Well, what does he mean for, I guess, these endeavors for fiscal discipline, number one, and number two, what does it mean for the Fed and Fed independence?
Yeah, so there's a couple of different things here that I think you really have to look at with a Treasury Secretary pick. On the one thing, in terms of discipline, I also think that, broader, global economic issues kind of come into play here. Depending on how strong your Treasury Secretary is, they can kind of act a little bit like a shadow Secretary of State in some ways. I think that particularly when we're looking at China, that's really important given everything that Trump has said about wanting to bring in more economic sanctions and tariffs and stuff on China. So that's one thing to look at. On the Fed, I think, Scott Bessent has actually said some really interesting things about maybe even telegraphing well ahead of when Jay Powell is supposed to be replaced, who that incoming Fed chair pick could be. That could mean that if that position is named well in advance, you have something of a shadow Fed chair going on there for a little bit. It would be really interesting to see if that's actually brought into the equation here, what that would mean for Fed policy.
Jill, thank you so much. In the meantime, though, as we can see, markets are running with this pick for now. Jill Deesis there, our news desk editor. Let's turn our attention now to China and this latest survey of economists showing that exports, at least the outlook for Chinese exports specifically, may reach a record high this year. That's as foreign companies front load their orders ahead of potential tariffs on the horizon. Let's bring in Stephen Engel, our chief North Asia correspondent with, we're starting to see this becoming or turning into action right now.
Yeah, and it's a tricky situation. I mean, it's a good thing if your export orders are increasing, but it's a bad thing in the political landscape if you're under the specter of increase from 25% tariffs that Trump imposed on about $300 billion worth of exports to the United States. In his first term, he's, of course, talking about 60% across the board on every product. So if you're going into the Trump administration, you're seeing China's trade surplus rising to what could be a record, because the survey of economists are talking about, on top of the 5% monthly year-over-year gain that we saw in exports in October before the election, we're now seeing the estimates, the consensus is for another 7% rise in the final current fourth quarter. That would bring it to that record of $3.548 trillion above the previous record that we saw in 2022. And also, again, we're talking about a trade surplus potentially because the Chinese economy is still in the doldrums. The imports are not catching up nearly on that big pillar of strength in exports. So you're talking about a trade surplus potentially close to $1 trillion. So that's not going to serve China well in any kind of trade negotiations, right? So we'll have to see whether this also, as they lean on the strength of those exports, when property is still in the dumps, consumption is in the dumps, what kind of stimulus is still going to come? We keep on waiting.
And does that play into any sort of, how does it play into conversations with businesses? Because today the Chinese Premier Li Qiang is meeting with a lot of well-known names to us. How's that going to factor into it, do you think?
Yeah, I think he's on a charm offensive, if you will. He's been meeting with a number of different leaders. I was there at the CIIE, the China International Import Expo in Shanghai in early November. He also had a roundtable with foreign executives. Today, he's also meeting with another group of foreign experts or executives who are in Beijing for the beginning of the China International Supply Chain Expo. That begins tomorrow. It's the second annual one, and supply chain is obviously critical to this whole discussion, not just only on trade, but of course on inflation and what's potentially going to happen in the United States on that front. But again, we're hearing the executives from Rio Tinto, Corning, also Thailand's CP Group will be in that roundtable, if you will, with Lee Chong today. They're going to want assurances that they're going to hit the 5% or around 5% growth target. They want assurances that the markets are going to be opened. We just don't know necessarily if there's going to be anything new coming from Lee Chong. Our sources are telling us it's going to be a pretty strict, scripted type of speech that he's going to give.
Yeah, certainly we've heard from sources that they do sort of follow a sort of set guidelines, I guess, in place. You don't want to have too much out-of-the-box thinking, maybe.
I still think they're coming up with their response to Trump 2.0. And as we've seen as well, holding back on the big guns for stimulus, I think maybe he'll give assurances that, look, we have enough tools in the box. We will unveil them when we need to. But I think they're still trying to figure out what end of January means when Trump comes back to the White House.
All right, our Chief North Asia correspondent, Stephen Engle, and I really think that's probably the conversation a lot of different business executives are having, because just over the weekend we had Jensen Huang, the Nvidia CEO, in Hong Kong, and that was something that he really came to the event with. So he was here he was actually receiving an honorary doctorate in engineering from HKUST, the Science and Technology University here, but he did take to the stage and he really spoke about that need for global cooperation, and of course Nvidia as a company really sits at a very awkward position between China, the US, and also Taiwan. Yeah, and
it's hard to underscore, to your point, right, that they're not able to sell what they want in China because of certain restrictions. And then there are, of course, ways of getting around that, of course. But you had a conversation with him, and, suffice to say, you did not have a weekend. You were there at the actual event, where I believe he was treated almost like a rock star, unsurprisingly so.
He was absolutely a rock star at this event. And I like that you say conversation, because I would say actually on the ground, I felt like I really had to sharpen my elbows to get through the crowd to get to him. But I did actually ask him about it, because in that speech he gave, and you can see him there on stage before he spoke, he was really talking about that need for global cooperation. I felt like we needed to get more details, though, on how he was really thinking about the incoming Trump administration. So I asked him about that in the presser after. Take a listen.
I don't know what's going to happen with the new administration, but whatever happens, we'll balance simultaneously compliance with laws and policies, continue to advance our technology, and support and serve customers all over the world. We'll continue to do that, and we'll be able to do that just fine.
So I guess what Steve was saying there, that a lot of, China's still figuring out what to do with Trump 2.0, but of course a lot of business executives are probably thinking the same thing. They just really don't know what it means yet, and the size of tariffs that are going to be levied on which companies or which countries as well.
Yeah, I think one of the points that he was making there too, I mean, to your point, was it's very difficult to take massive action now, not knowing really where those guardrails are going to be. I mean, remaining flexible, keeping your product line. I think to his point, they're also quite flexible depending on when and how you're able to sell it as well. Anyway, fantastic conversation there, of course, with Bell. And the other one, which we'll get to a bit later on as well, is how this is moving markets in Korea, with Samsung up over 2% right now on the back of some comments that Jensen Huang made there over the weekend there with our team. You can read more about, and speaking of AI, the chip sector in our Big Take today, which focuses on, interestingly enough, Amazon and its efforts to make its own AI chips to rival those it actually currently buys from its biggest customer. There we go, in client, Nvidia. Subscribe, you can check that out, Bloomberg.com. It's also on the terminal.
And coming up, we're going to have a look at cryptocurrency's growing footprint here in Hong Kong. Digital bank ZA joins us to talk about their crypto retail trading push. And we speak to a member of the city's Web3 task force about institutional adoption of digital assets. Of course, it's really all around that Trump trade and looking at $100,000 per token. But counting down to the open of trade in Shanghai, Shenzhen and Hong Kong, we are guiding for a stronger start. This is The China Show. You're watching The China Show. Quick check on the yuan fix. The reference rate just coming in. It's yet another stronger one than estimates this morning. And that, I'm trying to remember how many days it's been now, but for several sessions in a row, we're seeing this stronger fix coming through and that pushback from the PBOC.
Yeah, what's interesting too is they might not need to do this as much as last week, and we'll see where the week goes. But the dollar today is actually seeing some downside, so that might be relieving some of the pressure right now. I think dollar yen is down, I think 0.6%. I think we're down to about 144 right now. On that very note. Now, a lot could change this week. You have, I think, Fed minutes coming out. You have a crucial PCE number coming through, which I believe is the last set specifically for PCE ahead of the December 17 meeting coming throughout the Fed. So we'll see what happens there. And, of course, things are shut towards the latter part of this week. You have Thanksgiving, of course, if we move into that part of the week. Anyway, it's Monday. Lots more to get through ahead of that. Let's bring in Andrew Tilton, Chief Asia-Pacific Economist at Goldman Sachs. The bank, of course, also comes out. They have this weekly to get us warmed up podcast every Monday morning to just talk us through what the top items on the agenda are for this week. What's top of mind for you, sir?
Well, top of mind, we have Bank of Korea meeting. Some question about whether they'll cut again this month. We think they probably wait with a dovish statement and cut in January. But that's one area of focus. India's reporting GDP. That's another item relatively high up in the agenda. And we have China PMIs at the end of the week. Right.
Well, let's start with China PMIs then. What are you thinking around the Chinese economy right now? Because I think if anything's come through in the earnings is that it's still looking pretty weak, the economy.
We've continued to see that exports are really the bright spot in the economy, maybe even brighter over the next couple of months as firms front load ahead of potential tariffs in 2025. But as policymakers look into 2025, they have to be thinking that they're going to need more support for the domestic economy. And we've, of course, seen some announcements on fiscal and monetary stimulus, but we think we'll need to see more heading into 2025. Typically, authorities have waited until they're a little clearer on the shocks facing the economy to react. And you mentioned the renminbi earlier. What we found in the first trade war was that the renminbi moved most right after U.S. announcements of tariffs. So we think policymakers may want to keep the renminbi relatively stable for now, but potentially could weaken in the first half of next year if we do, in fact, see tariffs.
As far as, I mean, it's anyone's guess, really, what and when we'll get them. But realistically, when might we see the initial sort of shots fired as far as tariffs go? Is that an early next year? Or is that still very late next year?
Our view could be quite early. It could be in the first quarter, even February or March. Of course, the inauguration is January 20th.
Yep.
The enabling statutes, as it were, that are already in place, and so it could be possible to pick up more or less where the Trump administration left off before.
In terms of, you said that they might allow the yuan to depreciate further. Where are you seeing that actually heading? And does that risk then creating currency wars in Asia? India's already, for instance, signaled they'd be prepared to push back.
We see the yuan going to around 750 to the dollar, so not a huge move relative to the scale of tariffs that are being discussed. In a way, this potential round of tariffs, if they really were 60% additional tariffs, as Trump has indicated they could be, we don't think the authorities would be comfortable, the Chinese authorities would be comfortable with the degree of depreciation that would be consistent with the previous trade war. You'd be talking about the currency going well into the eights. We don't think that's something they desire. It could affect confidence. It could affect capital outflows. More likely that they try to respond more aggressively on the fiscal side in that scenario. And I'd also add, we don't think we'll see an average 60% tariff increase. Trump won in part because of concerns around inflation in the U.S. economy. Right. We think it's unlikely the U.S. administration would want to put such high tariffs on consumer good imports.
Well, speaking of consumer, just I guess one last question on China. Do you see a clear path between the current cocktail of measures that they've announced so far, and who knows what dry powder they still have, between now and a recovery in consumer confidence, or even the housing market? Can we make that connection right now, or is still are the gaps still missing there?
Still some gaps, we think.
Okay.
We're seeing efforts to bolster local government finances, which could be important, not just for saving some interest costs with cheaper debt, but also for allowing cash-strapped local governments to pay employees, pay suppliers, which could allow more money to flow through the economy. So we do think that's meaningful, but we haven't seen full details, for example, on extension or expansion of the goods trade-in program, other elements of a policy package that could support the goods sector of the economy if it comes under pressure next year.
It's not just, of course, tariffs on China. There's many countries. How do you see that playing out on the ASEAN growth story then?
Yeah.
Well, it's a really interesting tension between the potential for ASEAN and maybe India to benefit from trade relocation if China comes under more tariff pressure, as, for example, Vietnam did over the past few years, and the risk that they themselves face tariffs from the U.S. You could envision a kind of whack-a-mole approach where right now the U.S. administration is focused on the gap with China, the large trade deficit with China, but many other Asian economies have significant trade surpluses with the U.S. Vietnam is potentially next in line for the focus of the administration. And these smaller economies that are more dependent on exports would actually be even more vulnerable to tariffs. So I think navigating that balance between potentially benefiting from the redirection of trade, but also trying not to come under the radar with regard to tariffs from the U.S. is going to be a key feature, a key theme for 2025.
How does that affect, too, the outlook for the larger exporters in the region that have managed to at least benefit from this AI wave? Taiwan, Korea, to a lesser extent, Japan, for example. And the reason I ask that, too, is have those economies been able to also diversify away from China that's weakening at the moment? What's the outlook effectively for those three?
Well, for the very high-end exporters that are producing more or less unique products or highly differentiated products, high bandwidth memory, yes, high-end semiconductors, there aren't a lot of other options. So even if they face tariffs, that will probably not be existential, we think, at least for those high-end exporters. Will ultimately still see the demand. It'll come off a little bit because of higher prices, but clearly higher prices haven't been too much of a detriment to demand for those chips so far.
Final question. Who knows if the Fed holds at the next meeting? Is a shallower cutting cycle for the Fed going to affect how Asian central banks see where their rates should be next year, for example?
We see the Fed cutting to around 3.5%, but the market's a bit more skeptical and has taken out some of those cuts. I think the dollar really matters as well, because exchange rates and exchange rate stability versus the dollar is so important for Asian central banks. It's really the strength in the dollar, in a way, the transmission channel of the views on Fed policy and tariffs that I think matters for how much flexibility regional central banks are seeing. So with tariffs potentially coming and with the dollar near a multi-decade high, we think that pace of cuts is going to be quite slow.
All right, Andrew, that was great to start the week with you. That was Andrew Tilton there, Chief APAC Economist at Goldman Sachs, and we'll have plenty more ahead. This is Bloomberg.
A partial list of some stocks we're tracking going into the open today. Some additions to the Hang Seng Index. These are the two, Kuaishou and New Oriental, as you can see, bid in your pre-markets. Kingsoft Cloud, a stock we're tracking, 25% up on Friday. I think it's up 100% this quarter alone. We're up a further 13% today, going into the Monday open, Bill.
Yeah, big interview with the CFO tomorrow, but quick check as well how that's pairing or feeding into the pre-market session. And again, looking for some gains here. Finally, some bright spots in China and Hong Kong equities. Welcome back. You're watching the China Show, and we're counting down to the open of markets this morning. We're actually seeing some upside coming through, and you kind of question, is this sort of how investors are thinking about Scott Bessent being chosen as the Treasury chief for the US? Does that mean a bit more stability in the relationship, or can it lend an element of stability to the relationship? He's not someone who's seen as an ideologue, so it could be a little bit more practicality as well.
Yeah, and I mean, don't ask why. I mean, if they're gains, just take them. I mean, following the week we had, or the weeks, plural, we've had in the Treasury market, it certainly helps with all-in yield at these levels. And in fact, we're going to have PIMCO on in the next hour to talk us through yields. It was certainly a catalyst. I think we're down just about across the Treasury curve. That's number one. Number two is, following the day we had in China and Hong Kong on Friday, it's certainly a pickup that is more than welcome with open arms as we go into the Monday session here. So we're up. This is the onshore open, a quarter of 1% to the upside. We did take out some lows, though, of late, specifically in Hong Kong. Let's flip the boards, please, if we can. So I think when you look at the Chinese market story, so we're done with earnings season. We should be getting the MLF at some point. We will be getting the PMIs at the end of this week, I guess, in terms of just progression and the sequential picture of how this recovery is shaping up. A decent bounce in Hong Kong, 0.8% on the Hang Seng Tech Index, which, by the way, is down, and with an 0.8% gain today, call it a 20% drop from the October peak. Tencent is up. The rest are seeing modest upside as far as these go. The other news that we got on Friday was some changes to the Hang Seng Index. So from 82, we're going to 83. Kuaishou and New Oriental will be added to the benchmark effective December 9. One stock is being taken out. That's New World Development, down 1.7. And Kingsoft continues to give this, I would even say, this world-beating rally in the stock. It's up by more than 100% this quarter alone. This is an earnings story, but I'm also scratching my head why this keeps giving. 25% on Friday in the U.S. session, a further 11% we're seeing here today. And I guess this is on the back of what you and I were talking about, Bill, early on, largely a lack of encouraging signs on the tech earnings story. Apart from this, obviously.
Well, that one, I mean, but also we've got upgrades because Nomura's just come through. They've lifted their price target to 670. So you're talking nearly double from where we are today. But anyway, we've got the CFO tomorrow from Kingsoft Cloud. That's so nice. We're definitely going to get all the details on those market moves. But yes, of course, the tech story in China has been a really big one and disappointing earnings really across the board. We saw the 5 biggest tech firms are raising $41 billion in market value over the past week. But let's get more with our China correspondent, Min Lo. And what's it going to take to win back investors, do you think?
Well, it looks like investors are already buying on the dip. I just checked Baidu's stock this morning, also in the green, but that was after a sell-off. It was down close to 9% last week after Baidu said that they are not seeing any significant uptick in terms of advertising dollars as well as consumer spending. And then you have PDD saying that the profits will continue to trend downward. So that really kind of wiped up all the optimism we've seen since the post-September, October stimulus so far. But it looks like there are some investors that are still bullish on China and they're betting on the consumption stocks. The expectation is that the government will continue to try to bolster domestic consumption given the vulnerability of this export-driven growth. And I just want to point out a couple of things from the economic forecast. The survey we got, exports next year expected to decline by about half from 7% in the fourth quarter this year to about 2 to 3% by the second half of next year. PPI, though, expected to turn positive finally by the second half of next year after being negative for close to 2 years now. So people are expecting the direction of travel, especially for consumption sector, to be positive going into next year, at least for the longer term.
Yeah, but these are economists' forecasts, so I guarantee you these will change and are probably not going to be correct anyway going into next year. Don't hate the messenger. That's really what happens. Hang Seng Index up 0.3%. 19,300 right now. We're looking at volumes coming through. Largely still flat compared to recent averages. The reason I bring this up is because we had some changes to the benchmarks, Min. Tell us more about what this index looks like. Is it effective December 9?
Yeah, it is. Not as big of a shakeup as people had expected. So they increased the number of components from 82 to 83. They added, as you said, New Oriental. They added Media Group, the home appliance company that just IPO'd not too long ago. They added Kuaishou, the short video platform as well. But they took out Weibo, the social media platform. They made slight changes to that Hang Seng China Enterprise Index as well. The number of components there remains unchanged at 50. But they swapped out Longfor, the property company, for PICC, the insurance group. So not a lot of changes there. It looks like the company at least is not in a rush to hit the target of 100 components. They didn't give a timeline, but they said they wanted to increase the diversity in the index. But it looks like they're making quite slow progress there.
Bit of a different note, but we did get an update from the China Cyberspace Administration over the weekend, and it looks like they're keeping a very close watch on some unfair, some non-compliant practices on the internet. But what are the details exactly?
Yeah, so the internet regulator is looking to crack down on these tech companies' algorithm recommendations. They want to crack down on the price differentiation or price discrimination towards consumers based on the data collected in terms of their age, their occupation, their consumption patterns. They also want to stop the creation of this so-called information cocoon, which is the exposure of consumers to certain types of content depending on their expressed preferences and interests. So they're sort of just cracking down on that algorithm, getting the companies to conduct self-inspection and self-examination, not really specifying the sort of penalties they will face yet, but the intention here is to ensure this orderly expansion of the e-commerce sector.
Min, thank you so much. Min Lo, there, our China correspondent. From the China story, let's turn attention now to India, and the Adani story keeps giving. So in the early goings of Monday, we're still seeing some pressure on some of these bonds right now, extending those declines. On your screens, a couple of their issues right now. As you can see, this almost near vertical drop into the current pricing, and I think we are down a couple of cents still on some of these issues. Shuli Ren is with us right now, our Bloomberg opinion columnist. She thinks the Adani Group legal challenges are actually souring this year's lucrative bond trade when you look at Asia high yield, which have done exceptionally well, really, and how tight these spreads have become. Yeah, Shuli, just talk us through what this might mean for this it's been a very winning trade.
It's very unfortunate because it's no secret that Asia's high-yield bond market is now doing well for years, right? 3 years of Chinese developer default, and this year is the first good year in about 5 years, right? And then, global investors, after fleeing China, they've been buying into the big tycoon names in Asia, such as Neural Development, and this year, especially in Adani and Vedanta, and thinking that these companies will be too big to fail. And in fact, this year, the total returns are doing pretty well, 15% if you're index chaser. Yep. But Adani is denting the holiday mood, unfortunately.
I really wonder about Hindenburg Research, and of course, they really caused shockwaves in early last year when they released their short seller report on Adani. And do you think that they feel vindicated at all by that? Is there any sort of read across from what they had in their allegations and their huge document, really? And anything that comes across from that to what we heard from US officials as well?
It's a little bit separate because the Hindenburg Research basically talked about Adani Group doing stock manipulation and they committing accounting fraud. And the global bond investor can say it's a he said, she said situation, and they can brush away the stock side of the equation and say, we are just doing project financing, right? But this time, the U.S. allegations are very different because they actually talk about how these projects are being won by the Adani Group, basically through, unfortunately, through bribery. That's what the U.S. government is alleging. So like with bond investors, they can no longer say, okay, I'm buying $600 million bond because of this project that's getting a 30-year contract from the government. They have to do due diligence right now and say, okay, is there a bribery involved? Will these contracts be called off? And that makes it very difficult for them.
As Dave said, it's the story really that keeps on giving, so we've definitely got a bit more to go on the Adani saga. But that's our Bloomberg opinion columnist, Shuli Ren there. And coming up, we're going to switch tack to cryptocurrencies because Hong Kong's ZA Bank says it's launching Asia's first crypto retail trading service. We're going to speak with the executive director, Calvin next. This is Bloomberg.
Bold, bullish, and bouncy. 3 Bs. Go. Sorry, random. Just came out. Out of the gates this Monday morning. So this is the story across cash equities across the Greater China part of the equity universe. 0.5%, call it that. Of course, just keep in mind we're coming off quite a big bounce, quite a big drop on Friday. So this doesn't retrace back all the way. It's certainly a bounce that helps. Some parts of this equity market did seem oversold at one point in time. That's number one. Number two is equity markets, generally speaking, are doing very well this Monday morning. Everything from futures to Japan is doing exceptionally well. And by the way, congratulations to everyone that finished and did personal PR, best record there. The Mount Fuji Marathon actually took place. I believe it was on Saturday. So good on you guys as well. Anyway, I digress. Let's kick it over now to Belle for our conversation around digital banks. Belle.
Dave. Yeah, well, bold, bullish and bouncy. I think there are also some descriptors for what's been happening in the cryptocurrency space as well. But actually, Hong Kong's largest digital bank, ZA Bank, says it's becoming the first in Asia to offer cryptocurrency trading services to retail clients. For more, let's bring in Calvin. He's Executive Director of ZA Bank and joining us in studio this morning. Thanks so much for your time, Calvin. So, yes, as we said, this is an announcement that you're making around crypto retail trading, but just talk us through it.
Yeah, our service is simple and straightforward. Hong Kong residents with a ZA Bank account can now trade crypto of Bitcoin and Ethereum directly in Hong Kong dollars and US dollar 24/7 with this banking savings account within the same banking app. I think that is we would try to make crypto more accessible to the retail investor. So the activation is simple, could be done in minutes, pass through the assessments, then the trading transactions can be done in seconds. There's no need for opening and the wallets or transfer to another account. The whole thing is just like the banking experience of other general banking services in terms of experience. Of course, we partner with the largest virtual asset trading platform in Hong Kong to ensure the trading experience is simple, highly efficient, and compliant to regulations.
So that's Hashkey that you've partnered
Yes.
with, which is one of the three that has the full license to offer crypto retail trading in Hong Kong. How does that partnership work exactly? And you don't need to get licensed then, I guess, with the same type.
We do have to use our Type 1 license for dealing with these virtual assets as a broker. The whole custody and the processing is done by our partner Hashkey. So it is in a general term, it's like a fiat to crypto, crypto to fiat. So for example, if our users want to buy a cryptocurrencies, they can buy simply with a savings balance, like deposit. Once it is sold, then the money go back to the savings account of Hong Kong dollars or US dollar immediately available for use.
So saying that you're the first bank in Asia to offer this, can you help distinguish for us the crypto service that we do see from some other lenders already, like DBS, for instance, offers some crypto products. There's banks in Japan like SBI Holdings, for instance. They've got 2 crypto exchanges under their umbrella. What makes this offering different to what we see?
Right. I think what we see ourselves as a bank to offer crypto trading service first is to retail investors. There are some of the peers or financial group in the region, they offer to professional investors. The other part is about the where do they allow the trade or transactions happen. We allow the users to be using the same banking app that they do for their everyday finances and manage the investment holdings alongside the traditional type like funds and stock and crypto in the same banking app. I think providing holistic views is important and making it accessible for general retail investor while they understand the associated risks and opportunities while for them planning for the wealth management as a portfolio allocation.
What sort of pickup are you expecting? What sort of proportion of your existing retail customers do you think would actually use this service?
It is very early for us to predict the demand and estimate the adoption, to be frank, because from the market data, the demand is clear. The surging prices, surging trading volume we have seen from the November since the election. And we can see the trading data as well from the partner exchange. But whether these could happen from a banking perspective, we'll see. But according to a recent survey by the Hong Kong Association of Banks, 70% of respondents saying they will be more willing to participate to crypto market if the banks are offering this service. So we're optimistic about this, but we'll see.
Can you share some more details on what sort of expectations you have around it?
I think this will help our non-interest income side of things, because this is we can see that the rate is coming down, so we have to brush up a little bit on the fee income side, and the wealth management is part of the key driver for that. We're looking for more decent growth in terms of our from our users, especially younger generation user group in our bank.
Yeah, to share more details around how it sort of helps your overall bank strategy, because of course ZA Bank, like a lot of virtual banks in Hong Kong, has had a very long path to profitability.
True. I think when we started out, I think we aim to be a longer partner for our banking customers, whereby in our 0.8 million users, majority, or we can see a higher skew towards the younger generation. And we have been thinking about how we can grow with our customers in that space. And banking is not for short term, it's a longer term business here. We believe that with more and more product and services that fit into that generation, we can see more higher product penetration from that early adopters or early users that stay with us longer. We can see the revenue producers grow along when we introduce more services like usually stock trading or the funds as well. So with the introduction of crypto trading service, we're going to be confident that trend's going to continue to grow as well.
So right now it's Bitcoin and Ethereum. What's the product pipeline then?
We are very enthusiastic about introducing more cryptocurrencies for those who are licensed in Hong Kong, available by the VATP in near future. And we have loads of product upgrades in terms of enhancing the user experience as well. But more importantly is to educate the customers to make sure that they understand it, because our target will be more like a newcomers to the crypto markets here.
All right, Calvin, thanks very much for your time this morning. That was Calvin Ng, Executive Director of ZA Bank. And as we said, David, saying that they're becoming Asia's first bank to offer cryptocurrency trading services to retail clients.
Yep, looking forward to that. I know some people certainly are. Belle, thank you so much. Great conversation there. Just ahead, in fact, we'll further this discussion, broaden it out with Hong Kong's Web3 Development Task Force on prospects really for institutional adoption of digital assets here in the city. PWMA CEO Vivien Khoo joins us in the next hour. Now, certainly it's been a landmark year for the crypto industry, set to be capped off by Bitcoin closing in, and we'll see when we get there. Could happen today, who knows. The watershed $100,000 level. Now, the Binance CEO discusses the rally following the crypto supporters Donald Trump's presidential election victory. Have a look.
President Trump being elected certainly give a boost and give greater clarity to this. But I will say that 2024 has been a landmark year, and that momentum started earlier this year. So if you look at what happened in January this year with Bitcoin ETF being approved, firstly in the United States and then subsequently all around the world, from Brazil to Canada to Australia, Hong Kong, and the list goes on. It gives a lot of recognition and finally the respect that this sector deserved all along. And with the likes of all the largest money manager and all the top financial institutions around the world starting to recognize the value of this space, you have Larry Finn, CEO of the largest money manager, BlackRock in the world, that went from a crypto skeptic to a crypto believer. I think that itself speaks volume. So if you look at the Bitcoin ETF, it's the best performing ETF so far in the history of ETF, right? Again, it shows that institutionalization has started and mainstreaming has started.
Could the Trump administration change everything for cryptocurrencies?
Well, it's a big positive. I think the last 4 years, especially if you are in the United States, I think the last 4 years has been pretty tough, right? In terms of, regulation via enforcement, which is not necessarily the best form of regulation. But we have a very pro-crypto president. And if you look at, it's not only President Trump himself, but the House of Representatives, 2/3 of the legislator being elected are pro-crypto. Same story is happening at the Senate level. Many pro-crypto legislators and policymakers are being elected.
And that was the Binance CEO, Richard Teng, speaking with, of course, that was Francine Lacqua, of course, our colleague. Right, if you are a Bloomberg subscriber, you can catch up on that specific interview or others that might have missed here. TV Go is a function you run on your terminals. You can also join the conversation by sending us instant messages to our team, to us specifically if you want it. And yeah, feel free to slip into our DMs, as they say. Check it out, TV Go. Plenty more ahead. Happy Monday. This is The China Show. Now, for a check of markets, 22 minutes into the cash market session, and we have since paired most of the gains. We're now trading about flats, if not slightly lower, as you can see on the CSI 300. A couple of other things that we're tracking here. So we did just get, by the way, and we were waiting for this, it did happen, the PBOC conducting its one-year medium-term lending facility at an interest rate which was unchanged at about 2%. In terms of, I think, some of the amounts out at $900 billion, more on that in a moment here, but we are certainly seeing a bounce in risk assets going into a fresh trading week. Belle, this is also one other story that we're tracking here, and we're looking at some of the internet-related stocks on the back of this, maybe this potential crackdown, if not already the start of what seems to be something along this specific line here.
Yeah, well, we heard this announcement coming through from cybersecurity regulators in China over the weekend, and what it seems to be relating to is companies that are having non-compliant practices around misuse of algorithms, for instance. So it's really that focus on companies that have location-based service providers. So Meituan, Alibaba, JD.com. We're seeing Tencent under a bit of pressure here today, but so far we're actually not seeing that coming across the board. What's interesting as well to note is Kuaishou, because that is seeing gains. It's been added. Weibo's still managing to move up 3.3%, even though it's actually been removed from the tech index.
Who knows why these things do what they do sometimes, especially on the Weibo story. Sino-Ocean unchanged here, but there's a piece of news here coming out of the company here. So the Hong Kong scheme did get approved by the majority of creditors. I think the next step right now for the company is then to seek approval of a Hong Kong court for that Hong Kong scheme. Complicated? Question mark? Yes is the answer. So we can further unpack that later on. Nothing much as far as the equity market goes. Of course, this is more a fixed income story. Plenty more here on the shows with these conversations coming up in the second hour of the China Show.
Welcome back to the China Show. Taking a look at the HSI half an hour into the session. We're actually off the session highs this morning. So we started definitely with a sense of positivity, and there was that sense that maybe this pick of Scott Bessent, for instance, for the Treasury role in the US could be something that would be seen as a good thing for Chinese equities. But just right now, we've actually turned a little bit negative, and it's the tech sector actually that's dragging down the benchmark today.
Yeah, because at some point we were going to run into this wall of earnings, which really didn't give us any, at least traders give them any further reason to chase the rally even further, I think, right? So when you look at the group itself, Hang Seng Tech is actually the one that has really retraced the most among the other benchmarks in China. I think Bill was also making the point earlier on some of these downgrades around, say, PDD, for example, which was the poster child, the darling, when you look at e-commerce, for example, up until recently, just is a reality check there for investors. Now, what this might mean, too, is it enlightens, I guess, it lengthens the runway for non-China longs in this market. So with the dollar pulling back today, that's going to come up on your screens very, very shortly. We're seeing markets like the Nikkei is doing very, very well today. Other markets in the region are also doing well. So in fact, we're up 1% on the regional benchmark today. Talking about dollar softness and the rally we're seeing across treasuries, 2s and 10s, and Brent crude is also pulling back a little bit. Samsung is leading the gains here, and this is more an idiosyncratic story, and perhaps no other better person to tell us why Samsung is doing this. This is the reporting, of course, coming out of Bell and the team here.
Yeah, that's right. Actually, so the Nvidia CEO, just catching people up, he was in Hong Kong over the weekend, and he was given an honorary doctorate from a local university here. On the sidelines of that event, we basically got our elbows out to try and get through the crowd to ask him a couple of questions, and we managed to ask him about Samsung and their path to certification, because Samsung actually so far hasn't been able to get their most advanced AI memory chips greenlit for supply into Nvidia, and it's that question, when is it going to happen? I asked that to Jensen Huang, and they're saying they're working as fast as they can to make that. But just to note as well, in the earnings last week, Jensen Huang sort of outlined some of the key suppliers into the business, and Samsung was a notable exemption from that list. Okay, so at least the path of travel is fairly clear. It's the timing, right? He was tight-lipped around the specific timing. I definitely asked him about the timing, and he just said ASAP, basically.
Okay. We'll hear more specifically on that later on here in the show. As we point out, it's a very good day to be long risk assets. We talked about the Nikkei. We talked about the Kospi as a proxy, as you can see on your screens here. We're looking at just about a rally across the sovereign space as well here in the region. Why don't we bring in Mark Cranfield with us right now out of Singapore to talk us through the key themes of the day. Mark, why don't we start with the dollar here following the pick for the Treasury? What's the connection between the two, Mark?
Well, there seems to be a knee-jerk response that Mr. Bessent might be a slight dollar bear when he comes in to take, assuming he gets the post of Treasury Secretary. That seems to be the initial reaction. But if you trail through the most recent comments he's made, I think it's much more nuanced than that. I think that's why the dollar move is, yes, there's clearly some dollar selling today, but it's not enormous. And I think people will take a little bit more time to work on this, because the bigger story about Mr. Bessent appears to be he's very favorable for US assets in general. He wants to obviously see a positive US stock market, and he's a bit of a fiscal hawk as well. So he's going to be pretty measured when it comes to US spending. He doesn't sound as though he's going to be a man that's just going to willy-nilly spend as far as the US Treasury can. It wants to be done in a measured kind of way that is good for the market, possibly getting Treasury yields down a bit, but balancing the books. He's got this target. He's talked about a 3% fiscal deficit, which is much more reasonable than some of the other people were talking about as well. So overall, he seems to be looking as though he's going to be a safe pair of hands if he gets the Treasury job. It's going to be good for US assets in general. And that is not really a dollar bearish signal. That is more, let's attract money to the United States, continue to support the US equity market, and have a stable bond market. That is not somebody who's outright bearish on the US dollar.
And so how does that narrative then around the dollar then affect the BOJ decision-making in turn?
The BOJ really needs to do the heavy lifting itself. They really need to get off the fence and get on with their rate hike as soon as if they want to defend the Japanese yen, if they want to stop the inflationary impact of a endlessly negative Japanese currency, the Bank of Japan just have to get on and do their rate hike, which the market is beginning to price. We're seeing signals that we've gone over the 50% mark now for the December meeting. Traders are just starting to price in the possibility that it really is a live meeting and that a hike may come. That doesn't mean by any stretch of the imagination that it's a done deal. Just because traders are pricing in slightly more than 50%, we've seen that come and go in other markets as well. It happens quite a lot. But at least people are beginning to think that what Mr. Ueda said last week about the fact that he doesn't want to predict the December meeting means that it's much more open than maybe people had thought in the past. So we still have some time to go. We've got about a month, just under a month to go before that meeting. We could see more BOJ speakers signaling slightly hawkishly. Probably most important, we need to see the Japanese media putting out stories to suggest that a rate hike is a real possibility. We saw it both in March and July. Coming into the meetings, by the time you see a series of stories in the Japanese media that a hike is really possible, then traders will definitely believe it. But it's encouraging that they're beginning to price in a rate hike of 25 basis points, which is really, that makes a lot more sense. They've raised rates to 0.25, to go from 0.25 to 0.5 and then onwards to 0.75, 1%. That seems to be the path. Whether it happens in December or early next year, there's still time for them to push it over the line.
Yeah, and our colleague Sherry Yan in Tokyo might be able to get the ball rolling on that. Sherry, if you're listening, just take that cue. Call some people.
I can help Mark, I know we have I'm in Tokyo. Next week. I'll help Sherry personally.
No, and what you can do, Mark, as well, is spend your way through Tokyo next week. Give them something to hike around, right? Boost that retail sales number. With the yen at these levels, Mark, I do not doubt your capacity to really reflate the retail sales figure there. Mark, speaking of reflation and the lack of it, I know there's a weekend in between this, but we need to talk about the drop in Chinese stocks on Friday. We've lost steam currently. Yeah. We're flirting with a bear market, depending on which benchmark you look at. Tell us about what's happening there. What do you think is taking place?
Well, I think people are getting discouraged. They're getting impatient. There's been a lot of stimulus talk. Of course, there's been some things put in place already. What the PBOC has done with the stabilization package for the market is also very good. But it looks as though there's no follow through. We had that initial burst of activity in September. Lots of things were announced. PBOC following up with lowering interest rates and also putting the first stage of this package in place. But if you look what happened on Friday, especially, Chinese markets went down on very big volume. It was a very significant sell-off, and there was no sign of the home team at all supporting the market as well. So you need to have follow through. There needs to be a continuous message to investors that things are going well in China, the economy is back on track, that markets are stabilizing. You can't relax on this, and that's the message that investors are giving to the Chinese authorities. They need to drive this through. They need to finish the year well and get the first quarter off to a good start next week. What we're seeing from the results from the tech sector, as Bell was saying, is not encouraging. They're finishing the year in not very good condition. And there's also this risk as well that if money is going to flow to the United States, if the US big tech companies are continue to dominate the world, that will be at the expense of somebody. And at the moment, it's beginning to look like it's at the expense of the Chinese tech companies. They need to change that narrative. China really has to do a lot more work to get its markets attractive, to get it in front of people, and to make this hot money which came in September, they need to make it stick. At the moment, it seems to be leaking away, and that's not a good sign for the market.
Mark, great stuff. Thank you so much. We knew it was going to take time. Anyway, Mark Cranfield there in Singapore for us at Bloomberg M Live Strategy. Perhaps the next catalyst could be the PMI numbers coming through later this week, or I think the week after, or some point in December. It's a Central Economic Work Conference, which might be the next landmark to watch there. M Live Go to take a look at the Market Live and our blog today on most of the key themes across these markets today. Get some commentary, analysis from Mark, of course, and his team on what's taking place beneath the hood in the investment universe this Monday morning.
And coming up as well, China's slowing economic growth, the ramifications around the energy space. We've seen a surge in clean energy that's definitely delivering a watershed moment in the global climate change fight. We'll have details ahead. This is Bloomberg. The COP29 summit has wrapped up after 2 weeks of intense and sometimes hostile negotiations. Nearly 200 companies, or countries rather, agreed to triple funding to help developing countries confront rapidly rising temperatures. Rich nations pledged to provide at least $300 billion annually by 2035, with a goal of $1.3 trillion a year. But the promised funding falls short of the trillions of dollars poor and vulnerable nations say they need to climate-proof their economies.
Yeah, meanwhile in China, you have the surge in clean energy supply, of course, coupled with a slowing economy. This has really become a political conversation more than anything as well. Have really put the world's largest polluter on course to peak emissions well ahead of a 2030 deadline set by President Xi Jinping. Let's bring in our energy reporter, Dan Murtaugh, who joins us out of Beijing right now. And yeah, Dan, why did you get us started? What's top of mind for you?
You know, David, if you look at the lack of ambition that we saw in these 2 weeks in Baku at COP29, you look at the U.S. election results, that there's been a very clear slowing in the momentum for the fight against climate change around the world. And so it's a good thing that like the one bit of really good climate news over the last couple of years is a really important one, and that's this slowdown in emissions growth here in China. China's rapid economic rise over the last 4 decades means that it's now contributing about 30% of the world's emissions. Its historical emissions are now basically on par with that of Europe, even though European nations were polluting hundreds of years earlier. And so what we've seen in these last 2 years, though, is a real speed up in the energy transition efforts here. Last year, China installed more solar panels in 1 year than the U.S. has done in its entire history. It's going to top that mark this year, likely. And we're seeing that clean power come onto the grid. And that means that we're, even though energy demand is growing here, the overall emissions are right at about the same level as they were last year, and it could be that they decline this year and start a longward downturn trend. And so, that for the country that's the biggest source of emissions in the world, it's one really nice bit of news that we're seeing some success somewhere in the climate fight.
Okay, well, we'll take it. We'll use that as a jumping-off point, a positive note. Dan, thank you so much. Dan Bernthal in Beijing for us. Let's take a closer look, really, at China's climate policy. And joining us here on SEC is Nneka Chike-Obi, head of APAC ESG ratings and research at Sustainable Fitch. Good morning. It's nice to see you. And positive is that the good takeaway, given that we do have at least a bigger number to work with as far as the annual pledges are concerned?
Good morning, and thanks for having me. So the announcement of a pledge of at least $300 billion per year to be provided through grant or grant-like financing to emerging markets by 2035. It is, in theory, a tripling from the previous pledge of $100 billion per year. There are a few challenges with it, though. On Friday evening, when the draft agreement was not completed, there was an X instead of a numerical value. Right. But the word after the X was trillion for grant-based financing. And we could see the number that was actually settled on was $300 billion. So that might explain why there was a bit of a negative response from some of the emerging markets negotiators who felt that they were expecting a much larger amount to be committed. Yep. And at least what the draft said indicated that. The remaining gap, which is estimated to be more than $1 trillion annually needed to help finance climate in emerging economies, the rest will have to come from private sources of capital. The sustainable debt market, which we cover at Sustainable Fitch, is around $1 trillion per year. Of course, not all of that is climate-related financing. Some of that is social financing or other non-climate green financing. So there is still a significant financing gap, and that can explain why some countries like India and Nigeria pose very strong objections at the end of the negotiation.
What are some of the immediate ramifications of that sort of financing gap? If you're saying it's around $1 trillion a year and the entire market right now is $1 trillion a year, that is a huge increase that you would need to see.
Exactly. And the sustainable debt market has not been immune from the wider macroeconomic conditions that we've seen that affected the overall debt market over the past few years. So there has been a resurgence in corporate debt issuance in the United States from the relaxation of interest rates towards the end of this year. But we haven't necessarily seen that ramp up in Asia yet. So that's one big question. We do have supranational development banks like the Asian Development Bank trying to catalyze finance through mobilizing additional private sector funds. But that is going to take a significant amount of time, and their resources are capped as well. We do see some emerging markets countries in Asia issuing sustainable debt at a sovereign level. Philippines, Indonesia, Thailand, which is about to come back to the market actually as well. So they have been quite successful. And internationally, investors are usually quite supportive of sovereign sustainable debt issuances, particularly if they can find investment-grade sovereigns. So that's one option. But again, interest rates and cost of capital, especially issuing in hard currencies, can be a challenge for some of these emerging markets.
Where have you seen and where do you see the appetite for sovereigns to that point you're just making there? Because at some point, do we need sovereigns to set the sovereign curve as far as the borrowing costs are concerned? I guess as far as that.
Yes.
And what is the reluctance to, and why are we not seeing more of it?
So in a lot of European sovereigns are actually quite active in issuing sustainable debt. And outside of Europe, I would say Chile is maybe one of the countries that's been particularly active. One of the challenges is just that sustainable debt requires a lot of additional reporting and a lot of additional information compared to a traditional bond issuance. For some emerging markets, there are technical assistance facilities available from development banks to help support them, but there is just a huge amount of additional reporting that's required. So it takes the establishment of more resources to actually build up a sustainable debt function within a budget management office, for example, and then a willingness to consistently issue. If you issue one-off just to kind of test the market, the kind of pricing benefits you may potentially expect, the so-called greenium, it's unlikely that you're going to benefit from that with just a one-off issuance.
What is that greenium? But I'm curious about that sort of relative attractiveness if you're an investor that doesn't have an ESG mandate but just is looking at returns.
Well, what we find, whether or not the greenium exists, is a very interesting debate. We do see it on some issuances. There are a couple factors for that. In some cases, it's a supply-demand imbalance. So there may be more investors seeking particularly investment-grade green bonds than are available in the market. Another factor is that we find that investors hold green bonds for much longer compared to conventional bonds, so they're not as available in the secondary market. And then the other factor is that there are asset managers who have separate pools of capital, some for conventional bonds and some specifically allocated to a sustainable green or some other thematic bond. So that means there's essentially more pools of capital available for some of these labeled issuances than if they had issued a conventional bond.
Donald Trump hasn't really been elected as president on any sort of green policy push. How do you see that and that question of whether we see more oil, for instance, being pumped out? How do you see that also impacting your industry?
Yes, that's a good question. Donald Trump was president from 2016 to 2020. During that time, he very quickly asked to withdraw the U.S. from the Paris Agreement on climate. What's interesting is that withdrawal was only effective in 2020 because of the way that the Paris Agreement functions. It actually took a period of time for the U.S. to withdraw. So the U.S. actually ended up out of the Paris Agreement for only about a year and a half because when Joe Biden was elected, he put the U.S. back in. If we look at some of the things that have happened over that time, sitting here in Asia, China has really, really become a dominant player in certain sectors related to the low carbon transition. Electric vehicles, they are selling the #1 electric vehicle in the world. Electric vehicle batteries and their related components, more than 80% of the market share. Solar panels, more than 80% of market share of solar panels and their components. So these trends are unlikely to change. These are really embedded into Chinese industrial policy. If you look at the U.S. and whether or not the new Trump administration wants to backtrack from some of these climate commitments, you do already have a certain amount of EV adoption embedded in the U.S. market. The Inflation Reduction Act, which has subsidized both domestic and commercial level to invest in some of these technologies. Many of the largest beneficiaries of IRA subsidies are actually Republican states that are very strong in support of Donald Trump. And we are starting to hear certain voices, for example, the CEO of ExxonMobil coming out and saying that the U.S. shouldn't just pull itself out of these climate commitments and create uncertainty for the sector. So that's even coming from an oil and gas major that's saying that the trajectory seems to still be going in a certain direction.
You mentioned China, and I'm wondering, does China need to do more, or is it already punching above its weight?
China is doing more than it needs to, given that within the UN system, it's technically considered still a developing country.
Okay.
So that $300 billion pledge, China is not obliged to contribute to it, but China has actually said they're willing to make voluntary contributions to that fund, and that those contributions will count towards the $300 billion. So they've put their hand up in acknowledgement of their significant contribution to carbon emissions and said we are still willing to also provide support to other nations. What they're doing in renewable energy and electric vehicles is very impressive, but you still do have the fact that they are also still building new coal-fired power plants at the same time. So some of the other factors, like your correspondent mentioned, economic slowdown in China, we also have a demographic shift in China where the population is expected to decline, and that also may contribute to actually reducing carbon emissions just sort of naturally as opposed to any significant policy interventions.
All right, Nneka, thanks very much for your time this morning. That was Nneka Chike-Obi there, APAC head for ESG ratings and research at Sustainable Fitch, and we'll have plenty more ahead. This is Bloomberg.
Nvidia has also benefited from being in this region, in China. We came over 25 years ago. Nvidia design centers in Hong Kong, Pudong, Beijing, Shenzhen have many proud HKUST alums and longtime colleagues who have helped me build Nvidia. They've also helped build China's technology ecosystem from the very beginning. We've had the benefit and the great joy and privilege of watching the amazing technology industry form in China.
That was Jensen Huang speaking at a university in Hong Kong where he received an honorary doctorate at the weekend. And it's safe to say that Jensen Huang is of rock star status.
You saw that firsthand.
I did see it firsthand. I mean, I saw someone hand over their passport to get signed. There was people handing over tech equipment. I mean, people were basically looking for anything that could get an autograph on it. So I think it's really incredible when you think about just to have started a business, for anyone that starts a business and to grow it into something like this within your own lifetime, really over just the space of a couple of decades, where you have an idea, you execute it, and now you are at the helm of one of the most valuable companies, not just in the world, but also you are at sort of the top of the kingdom for the AI chain as well. It's incredible.
And yeah, I mean, and you are getting rewarded for it, obviously on a on a basis where he is really like a rock star. I mean, passports and other things is certainly a step up from, I think, what he signed last year in a certain place.
If you know, you know on that one.
If you know what we mean. But, you're getting rewarded for it. I think we were having this conversation last week when they reported earnings that analysts are still trying to catch up and try to figure out how big this thing gets. And the fact that there's a mismatch between what the company reports and what it guides to and where the market thinks it is on a quarterly basis, it's a moving target, right? So it is the world's most valuable company, I believe, as far as market cap goes. I could be mistaken, but I think it is. The other part to the story, too, is the Samsung story, and I think we have that maybe later, maybe now. It's up 3% in Korea, also on the conversation Bill had with Jensen Huang.
It's 11:29 a.m. in Tokyo, and very strong start to the week for the Nikkei. They're up 1.5% as we head into the pause for 1 hour. But it's really that story as well around the Japan business relationships in the US, because of course Japanese companies they make a lot of their money from abroad, and so there's those signals that are coming through that corporate activity in the US is going to expand off the back of President Trump coming in, or President-elect Trump. Looser rules around M&A activity, for instance. All of this could benefit some Japanese companies. And so we are just seeing those gains coming through, as well as we track what is actually some strength in the Japanese yen this morning as well.
Yeah, and I think the point you're making too is when the yen tends to weaken, I mean, the fact that there is still largely that inverse correlation between the yen and the equity market underscores, of course, that sort of broader non-Japan market for many of the Japan corporates. But today, of course, it's the opposite. It's a broad risk rally we're seeing across the region, with the exception of, last we checked, Chinese equity markets, which are, of course, dancing to a different tune. Up 1.1% on the regional benchmark, thanks to what's happening in Japan, to a lesser extent what's happening in Korea, with Samsung up, electronics up about 3%. Every single sectors group, as you can see on your screens, is higher. It certainly helps that the dollar is coming off a little bit after 8 straight weeks of gains on the dollar gauge. I think at about these levels, you're almost back to multi-year highs on specifics. And yeah, thank you for the bulls. S&P futures now have a 6,000 handle as far as S&P futures go. So it's shaping up to be a good week. It's a truncated week of Thanksgiving, of course, the latter part of this week. Very quickly, I think do we have treasuries up? I think so, we have. There's certainly the bullish Bessent bounds that we're seeing here. Can we get treasuries up, please, as well? You're seeing a rally. They're just about across the board here of about 4 to 6 basis points to the downside. And what's happening there, it's going to be interesting to see really what this means for the credit markets. And as you can see, global IG and high-yield spreads are historically very tight levels on this graph right now. I think we're going to show you treasuries in the curve right now. And yes, it's a good start to the week. Does this continue, and what is the appropriate investment strategy as far as credit goes? Let's bring in Annisa Lee, EVP and Head of APAC Credit Research at PIMCO. Good morning.
Good morning. Thanks for having me.
So what's the advice right now?
I think it's actually good for bond issuers coming to the market, right, given Treasuries has performed, right? So I think there are a lot of issuers waiting to come to the market to issue, especially they want to come probably before Trump, and some may want it to come later on. So depending on how they see rates will be going. But I think recent outperformance of Treasuries will actually trigger some bond issuers coming out to the market earlier.
And are you talking about investment grade or high yield? Which
I think for both. Yeah, I think depends, right? If you have refinancing needs, you have capex needs, you need to actually raise money, it is a good timing to some extent.
Is the window closing, though, just to pick up on the supply point as well? Because we don't know where rates are going to go. They might actually move up substantially next year. So are issuers working on a very tight window here to issue, if they need to issue?
To some extent, yes. Okay. I think initially, right, I think previously a lot of people will actually stop issuing because it's Thanksgiving, it's close to Christmas. Okay. But I think this year round could actually be quite different because, Trump will be in office in Jan, right? So I guess some of the issuers, they may want to actually capture the outperformance of the Treasury market today and may come to the market earlier than expected. That is possible.
And when Donald Trump does come in, we've got a big question mark around tariffs as well. So how is that sort of playing into your thinking around Asian issuance in particular?
Sure. I think for Trump, right, I think the market is expecting that, there will be some new tariffs or some existing tariffs being increased. I think these overall would actually be slightly negative to Asian corporates that may actually focus on exports or those basically have low profit margins. So it could be the case that, some of the corporates may front-loading their purchases. That's why, to some extent, we may see some distortion in terms of the historical patterns of macro data and also corporate earnings that, could be different from previous trends. And in terms of issuance, depending on how they see the inflationary impact of Trump tariffs, some may actually come out early to issue, and some because, the inflationary impact is that, Fed may not cut rates as quickly as they had expected, they may come to the market to issue later.
I know you're constructive still on Asia credit as a whole. I mean, tell us why, if I'm sitting on a portfolio of Asia credit, for example, why I should not be worried about all these things. What is keeping us sheltered here? Sure.
I think Asia is still a high-growth region across the globe, right? Many countries still have 4 to 6% GDP growth. And, of course, there are more market volatility, especially for those corporates that may actually have negative impact coming from tariffs. But I think if we actually look at our dollar bond universe, most of the corporates, they are having quite decent, solid credit profile, okay? And, of course, a lot of them are domestic consumption sector focused. So those will actually be less impacted by Trump tariffs policy. So sectors such as like utilities, infrastructure, and financials could actually be less impacted. And that's why, we still see credit spreads, pick up over some of the U.S. counterparts. So that's why, we're still positive on Asia credit after all. But I think we need to actually be pick and choose, our right names, especially for high yield, given that there are, recent price correction in some of the names. I think the key thing for investors, including us, is to actually pick names that we like, plus better bond structure and also tighter bond covenants in order to maximize the credit protection to us being bond investor.
How are you thinking about that in the China context? Because you were just mentioning in the ad break that you have a preference for POE over SOE.
Yes, I think for China credits, right, especially for IG, overall is fairly tight. But we still see some spread pickup among the China POEs as compared to the US IG names. China SOEs are basically very tight, and we don't see much value in that. That said, I think overall they have decent access to onshore bank loans, or some of the POEs they're still able to actually issue in the dollar bond market. And that's why we basically see more value in the China POEs instead of SOEs.
Anything in the either developer or developer-related sectors that, where risk might have come off because of the policy pivot that now looks like it has some value?
I think for China property, we have seen sales picking up in October. Yeah. But I think the key question is how sustainable it is. I think we still need time for existing inventory to be cleared. And I think the government still need more easing measures on the property side. On a longer-term basis, at the end of the day, we need people to have the animal spirits to see their income going up, or they have their job security before people will be making the biggest purchase in life to buy a property.
The Adani Group, we've certainly seen shockwaves, and we've seen it even impacting other Indian corporates who have been a little bit more reluctant to test the debt market. What is the longer-term ramification of this?
I think I will not be able to actually comment on specific name, yeah. But I think in general, we're still okay with Indian credits. I think given that market volatility is always there, right? So it's not something that we have not seen before. So the key thing is really to do your credit work to see, in a bad case scenario, how bondholders could actually be protected. So that's why, going back to my original comment, we prefer names that have better structure, tighter covenants, and in case of weak situations, we can get the best out of the worst situations.
Yeah, I was going to ask you, because this is actually, I think this is important. And let's take this opportunity to talk about the debt covenants. I mean, it's not the sexiest thing to talk about, but how can a closer look at this specific fine print help investors maximize their return? Like, why would this be important in this case?
Well, there are a lot of covenants, right? But the major ones will be to limit the company to issue more debt, right? Okay. Under circumstances, right? So this is a potential preventive measures for company to go too leveraged, right? And there could be also situations whereby, issuers would be limited to actually pay out dividends, right? In certain circumstances. So that would also be a way to actually protect bondholders' interest.
Annisa, thanks very much for joining us this morning. Great insights there. That was Annisa Lee, EVP and Head of APAC Credit Research at PIMCO. And coming up, we're going to go back to the cryptocurrency market. Bitcoin, of course, big focus, eyeing that $100,000 threshold. We'll have analysis from Hong Kong's Private Wealth Management Association next. This is Bloomberg.
I don't have a crystal ball to look into the future where the coin price will be. What I see currently based on market trend is there very robust pent-up demand for Bitcoin, right, from institutions, and we are seeing a lot of allocation. I do think that if US come in with the strategic Bitcoin reserve and many other countries following suit, and sovereign wealth funds, endowment, and the rest starting to do allocation, I think those are big positives.
Richard Teng there, Binance CEO, talk to us about, the crystal ball, and everyone has their own respective crystal ball recently on Bitcoin. The 6 digits mark is the next milestone we're tracking, just below 2,500 from that specific level there, Belle.
Yeah, it's all about this question of when do we get to $100,000 a token. But let's get more on that now. Bring in Vivien Khoo. She's CEO of the Private Wealth Management Association, or PWMA, and also a member of the Hong Kong government's Web3 task force, previously chair as well of the Asia Crypto Alliance. So you've got a couple of hats you're wearing today. But I do want to start with this chance that we get to $100,000 per token. And we were sort of had questions, would it actually happen over the weekend? Of course it hasn't. But what happens when we do get to that point? Do we see sustained gains from here, or do you think that we sort of see an element of profit taking?
Yeah, I would say that actually, my guess or statement would be as good as anybody's guess, but I would just highlight maybe some of the prices that's been called out, by Mike Saylor and Kathy Wood. Those are longer term prices, and maybe it's not that irrelevant to call out those prices, because you're talking about, 10, 20 years away. Bitcoin has only been in existence for 15 years, and it will. Personally, I'm an advocate, and also, I do infrastructure, long-term investor, not really an analyst or sort of crypto trader. But I think based on the fundamentals, I think a lot of reports already called out. Actually, Q4 this year, we will be going into a crypto bull market. So 100K will be reached, but we see a lot of resistance also, actually, because that's a psychological level of a lot of traders, and you see actually a lot of people taking profits. And after that, whether it goes to new heights, depending a lot of what the Trump policy, some of the worldwide policy, and investor sentiment.
How has the broader take-up of the asset class been like from institutional investors? Because that's a slow-moving target, and even if we get to 200,000, there are people are going to say that, I'm waiting for 1 million. So there are people who will not be convinced. But I'm wondering, have the incremental buyers been convinced right now that they need to allocate towards this space?
Well, I think the series of events, from ETF approval to the volume that's traded. Actually, last week it hit 5%. The ETF, that's the percentage of the market cap for Bitcoin. I think those are a lot of factors that contribute to validating, this is here to stay. So, whether it's being adopted by institution, I think there are two separate segments. One is, if people are making market liquidity, I think prop traders and institutional side, definitely sentiment. You guys probably saw like Goldman Sachs said that they're holding 700 million worth of BTC or crypto ETFs right now. So a lot of the firms will start looking at opportunities. But I think people should also be aware. I think there are other options for investment, although not as volatile. So if you invest in tech stock, gold, versus Bitcoin, what are some of the comparables? On the wealth management side, I'll say the take-up would be slower. Because we deal with individual investor protection is usually the key. So some of the frameworks, particularly for Hong Kong, will be, we have some hurdles to jump through from suitability and complex products before we can really get there.
That's what I'm wondering about, because I think that over the course of this year, it's been sort of that story that it was sort of the people that were really holding out, like the OGs in the space and people that had that belief. But do you actually see out of the clients that you speak to that there's someone who's new, who has never invested in crypto, that now says maybe this is the moment to get in?
I think there are definitely those, but the market now versus last cycle, personally, I think it's a bit different because, as you said, the OG, the crypto native, they were in the last round. I mean, they're obviously, some of them collapsed, some of them are out of the market, so you have a new wave of investor in this round. And the fact that actually there's a lot of ETF trading, crypto native probably will be trading on different type of crypto investment. So you see the institutional definitely going in this round more in a more scalable way, and you will have more regulated player. And with the Trump administration, with people going in pro crypto, so policy-wise, infrastructure-wise, people will be a lot more ready.
You just mentioned President Trump, and we know that Gary Gensler is going to be stepping down as the chair of the SEC, and so we could have someone who comes in who's more pro-crypto. Given, as you sit on that Web3 task force for the Hong Kong government, how do you think that a new SEC chair that could be more favourable to digital assets could impact the regulators here? Because if we see a lot more openness toward the sector from the US, surely that puts a little bit more pressure on Hong Kong to also start to have different sorts of products beyond just simple trading. It's very vanilla what we have right now.
I would look at it on two different levels, because I think in a more macro level so Hong Kong has been planting the seed. They've been building out, the infrastructure regulation. So they've been getting ready for this in the last couple of years. So I'll say that actually we're in a good position to now take action, to sort of take in more licensed platform institutional investor, whereas the U.S. has been in of a back foot. Of course, I think the competition will heat up, with U.S. now, U.S. driving a lot, being a lot of, the crypto market, and also with a very big group of pro-crypto sort of administration going forward. I think a lot of change, but things take time. So I think a lot of the cases, a lot of the sort of legal action that's still out there in the U.S. needs time to settle. And then even if Trump appoint a new group, it will take time for them to settle to decide, is it Solana ETF they're going to prioritize? Actually, what other things they want to prioritize on.
What do you think they can learn from Hong Kong?
Just looking at how fast we move in a short period of time. From you guys know, because I started talking to Annabelle probably some years back when Hong Kong was sort of not as receptive, should I say. So you see, actually, in a few years, we have moved very quickly. So attracting, consensus is going to come in February. It was held in Texas before. So a lot of these sort of global crypto or Web3 events, that's going to attract a lot of audience, actually centralizing in the place, and that would just incentivize more business in Hong Kong.
Vivien, have a nice week ahead. Nice to see you. Let's do this again soon. Vivien Khoo there, PWMA CEO. Just ahead here on shows, Elon Musk's mother rises to fame in China. We look at what that means for Tesla, the Tesla CEO, as he navigates ties with Donald Trump and Xi Jinping. This is The China Show.
All right, one of the big movers in the session today is Samsung. We're seeing that stock up as much as 3%, but it is coming down to some comments that we got from the Nvidia CEO Jensen Huang over the weekend. He was here in the city to receive an honorary doctorate. I actually spoke to him. I asked him about the path to certifying Samsung's most advanced AI memory chips. He said that they are working on it as fast as they can, and that is the resultant market reaction today in the session. What else we actually spoke about at that event was also how is Nvidia going to navigate navigate those relationships between the US, of course, where it's based, China, where it still gets a lot of its revenue. Taiwan, of course, is another question, given it's got its major suppliers there like TSMC. I asked him about that with the incoming Trump administration. Take a listen.
I don't know what's going to happen with the new administration, but whatever happens, we'll balance simultaneously compliance with laws and policies, continue to advance our technology and support and serve customers all over the world. We'll continue to do that, and we'll be able to do that just fine.
Yeah, and speaking of big tech CEOs that are in this part of the world, Tim Cook, we understand based on some of the reporting, and by the way, there is, of course, this big China International Supply Chain Expo is in China, discussing, of course, and I think they are set to meet, of course, with the leadership there. This is, of course, not Tim Cook for obvious reasons, but, you know, it's what astounds me is when people say, Bell, that they, you know, let's disengage from buying or getting exposure to China. Let's just buy, say, the S&P 500 index. What you're doing there, you're effectively still buying China exposure because the biggest companies there largely depend as well on exposure to China. So I guess the point is it's very hard to disentangle the two things and simply look at these two from two separate points in time.
I think Apple, you know, it's not just a huge, China isn't just a large source of revenue, it's also where it's manufacturing the vast majority of its products. So yes, exactly. And I think Tesla is a really great
thing. Yeah.
Yes. And so many question marks over Elon Musk if he's got that central role in the Trump administration, but he also walks a very fine line with his relationship with Beijing. But you know what's really interesting as well, and one of the most read stories over the weekend was Elon Musk's mother, because she's becoming a very controversial figure in the country. His mother's actually become a social media darling in China. So let's get more on Maye Musk's celebrity status, bring in Bloomberg's Adrian Wong. And Adrian, you know, this really wasn't, I read this story, I thought, wow, this is really left field. It wasn't what I was expecting. So why does she have such a celebrity status?
Yeah, so just to explain who she is, Maye Musk, she's 76 years old. She is quite successful in her own right. She has been modeling since the age of 15. She's been on covers of Vogue. Even just a couple of years ago, she was on Sports Illustrated swimsuit edition in her 70s. So she's been very successful. And it really kick-started when she released her memoir back in 2019 called A Woman Makes a Plan. And a year later, it was published in Chinese, where it really resonated with Chinese readers, particularly with female readers, because we spoke with a social media marketing agency and they were explaining to us about how she was aging gracefully. She was really a strong symbol of like parenting and wisdom, and really noted her close relationship with her son Elon Musk. And so it really kind of kick-started from there. And when I was scrolling through the comments on Xiaohongshu, her account, which is, for those who don't know, is similar to an Instagram, a lot of comments were talking about how she was an icon, how elegant she was, and really how inspirational she was. And she was just only in Shanghai just a couple of weeks ago, where she was promoting a local Chinese mattress brand, AISE Baobao, and that wasn't her only gig. She's been, since early 2023, she's actually made very regular visits to China. She's even been an ambassador for Oppo, the consumer electronics brand, and various clothing and apparel wear. So it's been really interesting to see kind of this rise in her popularity. And you know, she's booked and busy. She's like literally in the country on speaking engagements and various modeling jobs.
Yeah, well, how does what Elon Musk has done, and he's invested billions, of course, in China, he's going to take on this new role, of course, in this new U.S. presidency, for example. Might that affect the popularity of Maye Musk in China?
I mean, what's really interesting is that now when you go through her social media accounts, there have been slightly more comments on his son and what his role is. I just want to read a quick comment. I just want to make sure I get this right. As long as Elon Musk doesn't forget how the Chinese helped him to build a gigafactory and doesn't let Trump do stupid things, the Chinese are always happy to give you a platform. That was one comment on her Xiaohongshu platform. And so right now, there's still a mixed response to Elon in China. So I don't think it's going to really move the needle in terms of like her popularity. I think the Chinese netizens are really kind of making very distinct things between her and her son. And so, you know, I don't think it's going to be too much because people are still commenting on how close she is for her Chinese fans as well.
Adrian Huang, thank you so much there on what may happen with May Musk. Okay, very quickly, MSCI China, we're flat right now. In the early goings of Monday, UBS has dropped this note in our inboxes right now. By the dip, they do see some upside, 5 to 6% share price return in 2025, and any pullback would present an entry point for investors. That's according to James Wang, who is head of China strategy at UBS. That's it from us on the China Show. Plenty more ahead here on Bloomberg TV. Stay with us.